welcome. New episode. A lot of things are happening in the world. It's Thursday for us. On Wednesday, that's why I'm mentioning that it's Thursday, Trump signed again a new import increasement of 25% on cars coming from outside of the US. And that has an impact on the market, as you can understand. And we're going to talk about the impact. And we're focusing on, so we talk about the automotive industry, but we focus on mainly on the German industry and mainly on Porsche and Volkswagen. So it was in the news Thursday morning, the stock prices went live and Porsche dropped direct 5%. And is Porsche then trading at highest levels? No, it is not. If you look
it's rather at lowest levels.
It's the lowest level ever, yeah. Porsche, Martin will explain later how the structure between Porsche, Volkswagen and the holding works. Porsche AG, that makes the Porsches, is on the stock market through an IPO in 2022. They came on the stock market for 80 something euros. They're now trading at around 48. So almost, if I may round it off, almost half of their value is gone. And they even have a much bigger drop if you look at the highest price of at around 110. No?
That was the highest 110, price. Yeah.
So it's trading 60% lower from their top in 2023. So Porsche is suffering a lot on the stock market. And is that 5% now? Is that something that the market is in overdrive? No, I don't think it is. It's the fact. Of course, this was already expected, but now it's a fact. So what about, when I'm talking about the 25% income tariffs, 30% of the revenues of Porsche are coming from the US. So almost 1/3 of their cars that they sell, the revenues is made in the US. So I think a 5% drop based on that 25% extra income tariffs is not even that much. No. On the other hand, it's already gone down, so the market has it already priced in for a little bit. And of course, you have to create your own vision on it, because I think a Porsche buyer, especially a 911 buyer, has he or she buys it with an emotional, a big emotional impact in it.
Really.
So if the Porsche buyer needs to pay 25% extra, the first question is how will they transport it to the end user, to the product itself, or the importer will take something for his own account, so less margin. That is also possible. But the emotional Porsche driver, will he or she pay the extra 20% extra? Some will, some won't.
No, absolutely, and it is also for them really hard to do something quickly about it, because they don't manufacture anything in the US.
No, Porsche.
No, Porsche, no.
No, I mean, they don't manufacture.
But that's the thing. So maybe you're going to shift production to the US to avoid this. That's what you see with other goods. But with this specific case, it's impossible. Every car is being built where it's built outside of the US. So that really means negative impact for.
I think they're all built in Germany, if I'm not mistaken.
Yeah, I was going to say it, but I didn't.
You didn't.
I was not 100% sure, and I don't want to have it to. I don't want to have somebody saying it to rectify it afterwards. So, but I assume it's the US, Germany. Yeah. Porsche. If you think about Porsche, I think the main model everybody pops into their minds is I think the 911. There's a lot of history behind that model. Started with the 901, then you had the G model, the 964, the 993. One model was not so successful, was the 996. It was a model with different sort of headlights. They quickly came back from that and then started producing the 997, which was, I think, very nice with the little round headlights again. And later on, we moved to the 991, and at this moment, we're at the 992. Is that correct, or is there also already a 993? No, this is the last one, is the 992. So I think that's the main model. Of course, you have other models as well. You have the Macan, which is nowadays only electric. You have the Panamera. You have the Taycan, which is a fully electric car. So they do a lot more, and I think that they're suffering on that side as well to compete with a brand that we will come up with later. If we look at how this governance is built up, it's quite complex, and we had to look at it also a couple of times to really understand it correctly. Also because, of course, in 2022 they had an IPO. So at the top of the tree, you could say you have the Porsche Automobile Holding. That's the Porsche Peach family that are basically the initial founders or the inventors of the Porsche. And Porsche Automobile Holding holds 53% of the shares of Volkswagen. Then you have Porsche Automobile Holding also having a 25% stake of Porsche AG. So those are, the Porsche AG is the company that actually builds, as Casper just told, the Porsche 911, for instance. Then you have Volkswagen. Volkswagen holds on their part 75% of the shares of Porsche AG. And the other part of the shares of Porsche AG are in hand of, it's a free float, so they're listed on the stock market after the IPO. Other owners or shareholders, what I'm just saying here, those are all shares with common voting rights. So you also have shares without voting rights, as you can see in the image, for instance, company like BlackRock, Qatar Holdings, and with Porsche AG, quite a big amount of the shares are publicly traded.
And it's really important for people that want to buy a Porsche share,
which one you buy?
Yeah, which one you buy. You have to realize if you want to buy the Porsche production company, that you have to buy the Porsche AG share. So really be careful if you want to buy that share, because we see, unfortunately, a lot of mistakes are made on a yearly basis.
Yeah, and also I think your comment was very correct when we recorded our Dutch vlog for our Dutch viewers. That's not only for Porsche, but if you buy a holding company, you want to say that you buy it many times with a discount, but it's not by default that it's good for you. And you will explain it now when you go into the price earnings, why there's such a big difference.
Oh, explain it now?
Yeah, exactly. We have it in front of us here, so let's look at that.
So I want to approach it from a fundamental angle and to keep it simple. We're looking at the price earnings. And if you first start again with the holding company, it's trading at around 38 euros. And the profit per share is around 16. So if you do the math, you only pay 2-point-something times the profit. And that is really low. You almost never see this.
Find a share like that.
You know, of course, if you are an investor, that you know that 10 is a sort of holy grail figure, 10 times the profit. And sometimes later we talk about some shares in the same industry with much higher PEs. So you only pay 2-point-something times the profit. Why is that? The main reason is that because it's what you were just saying, it's a holding company, and holding companies are always traded on a discount. It can be 30-40% less than if you look at the underlying investments. So in this case, the share in Volkswagen and the share in Porsche AG. And why is that? That's because normally, and especially in this case, that the holders of the company, they have the voting rights, they have the power. So the two families that you just mentioned, they have the power. And if you invest in it, you only invest in the share itself. And especially professional investors, they want to have voting power in it. So that's why it's so cheap. It's trading at 2-point-something times the profit. And don't think that, okay, it's now, let's say 40% undervalued, that in next year it will go to the zero. No, it always stays undervalued.
Correct.
Now, tomorrow, and yesterday.
Next one.
Volkswagen. Volkswagen is trading at around 100 euros. Also went down after the news of the new import tariffs. And the profit per share is around 20. So you pay for Volkswagen only 5 times the profits. Also not a lot. And we also have here the outlook for Volkswagen, and this is just based on the day until the moment that the new tariffs were announced.
Yeah.
Of course, there is already by the analysts something they take into consideration. This is really interesting to see for the next days and weeks how the market develops, how the analyst changes their opinion and they adjust it.
If you look here at 2027, they predict 40 euros, and you also go to like 2.5 times.
Yeah.
Yeah, you'd say that cheap, but there is something going on here, of course.
Of course, and I think they won't make the 40, but then still it won't say that it is not interesting to buy Volkswagen. The last one, Porsche AG, so the ones that buy the produce and sell the Porsches, the cars, trading under the 50 euros. Profit per share is what is it? 2 euro something. Sorry, 4. Sorry. 4, no, 4.
Oh, sorry, 4
something. Yeah. It's around 12 times the profit. So, hey, much more expensive than, for example, Volkswagen, 20 times the profit. We'll come back later on that. The outlook is still really good. It is expected that in 2029 it goes
Around
to 6. And then you only have like a 9 times the profits. But still, but take in consideration, if you look at the outlook, don't take your decision now on the forecast that's in your screen, but wait a couple of days or weeks when it's adjusted.
Correct. Then looking at it from a technical perspective, you see, of course, a line that was a lot higher and went down. All three of those companies, Porsche SA, the automobile holding, Volkswagen, and Porsche AG itself. Yeah, there's one company was actually doing a little bit better at the start of this year, was Volkswagen. Volkswagen, they came down from, I think it was almost 160, it went down to almost 80, 90, and they started to climb up again. Now this comes across again, and you see the price also, of course, affected by it. Porsche AG is definitely the loser of those three, if they're all correlated. Was actually doing it quite a lot better than the other companies, but you see that, especially this year, Porsche AG, which is the pink line, the red pink line, is the lowest of all three, and quite a big difference. Looking at Porsche AG in comparison with the DAX, it's almost an opposite chart, as you also said before. You see that in September, October last year, the DAX crossed Porsche, and Porsche went only down from that point on. I think it's also one of the reasons that Volkswagen maybe did it better at the beginning of the year, mainly also due to this DAX. You see how the DAX rallied almost 14% in 2025. Volkswagen is of course part of the DAX, so automatically when you buy a DAX ETF, you're also participating or buying Volkswagen. So,
but I think this chart is quite important, because what you say this year, we also discussed it last week, that the DAX is also is doing really well. One of the best stock markets so far this year. And if you are in a market where you in a negative way outperform it like this, it's not a really good sign, unfortunately.
No, that's not a good sign.
And competitor, the biggest electric car producer of the world, biggest in, if you look at the sales, the amount of electric cars that they sell, is Build Your Dream, BYD. The name was founded, we understood, Build Your BYD, and then later some journalists asked, where does it stand for? And then they had to invent something, and then they said, okay, Build Your Dreams. I was in China a month ago. I saw Build Your Dream cars that I've never seen in Europe. One of them, and I think the best cars are still not in Europe. No. And they already sell so many cars here. They have an SUV. It's a huge car. You can look it up in YouTube, because you are on YouTube. First, finish our blog. Don't skip away. After you like us, you can do that also now, subscribe and everything. Or if you look at through Instagram, wait until the end and then you go to YouTube. That is an SUV with more than 1,000 horsepower. It is a really big car. You have to like it, it's personal, but it's a huge, it has everything in it. And on top of that, it can even float in the water.
Yeah.
And they have also, it looks like a McLaren, a racing car, and that can even jump. That can jump from, and both cars can turn around their axis 360 degrees. I don't think it's good for your tires, because if you look at the YouTube, you see all smoke coming out of the tires. Yeah. But it says something about the technique, and I think that's a strategy. Well, we're looking at one version. I think it's also
beautiful car.
The Build Your Dream seal. It's also nice, but I think they keep the best for last.
Yeah, possibly.
Then if you look at also from a fundamental perspective, it's trading at 390. The earnings per share are around 10-15 for this year forecasted. Hey, and what you see is then it's really much more expensive share than, for example, Volkswagen and Porsche. So the market already think that this is a much interesting share to buy from a PE perspective than the German, because what is in place for Volkswagen is almost the same figures for BMW and for example, Mercedes.
Absolutely.
So that's insane.
Yeah, and if you compare BYD and also lastly, as from a technical perspective, you see also here it's a complete. It starts slowly. This is a chart from a year ago. You see Volkswagen and Porsche both trading much higher than nowadays levels. They both came into a decline. And Porsche, despite all the rumors of the trade wars with China and the US, etc., BYD has done really well, or at least on the stock market has done really well. It's like an old diesel coming, and all of a sudden, boom, it got traction and it only went up. And if you look at it from a wider perspective, we added here. We like to make it a matrix in which you can visually see what elements are there. Casper is going to talk about one company that we added, Ferrari. But look at BYD, for instance. Market cap wise, it's the largest car company in the world. You already mentioned it, but you can see also not just by a little bit. It's 150 billion worth of market capitalization. Looking at revenues, there Volkswagen is still the biggest player. Dividend-wise, Volkswagen is also your play. Looking at the loser here, you would say from a different perspective is maybe Porsche AG again. This is a little bit smaller. Target price, however, but that's not including the news of yesterday, of Porsche AG lies 20% above, and target price is what the analysts are saying, not what we are saying, so they have their consensus, 20% above the current price. So maybe they are right, but it's very, like you said, very interesting to see what the analysts will do with those ratios. Ferrari, Casper?
Yeah, one of the reasons of the IPO of Porsche was so they wanted to have one brand separated from Volkswagen as a share, to position it more like a luxury brand. Volkswagen, if you compare it with Ferrari, you can see it in the sheet, the market pays 46 times the profit for Ferrari. So remember, it's around 12 for Porsche. So it's much more an expensive share because the market sees it as a luxury brand like Louis Vuitton, like Hermes. And the goal was of Porsche to split it up and also position this as a luxury brand. And probably they also knew that they wouldn't make it as expensive. They couldn't make it expensive as Ferrari, but this low, I think they didn't expect that. So that's why Ferrari, you can't consider it from an investment perspective as a car producer. It's a luxury brand.
It's a luxury brand, yeah, absolutely. So I hope with this we gave you a little bit of insight with a focus on Porsche in this case, because it was, I think, the biggest victim of what Trump announced yesterday. You can see that the impact is heavy, especially on specific companies. We didn't look to for instance, at Stellantis, which is also a giant company. But with this, I hope you have a bit of an idea what the impact is. And if you have any questions about this, or if you have those shares, what can you do? How can you protect it for further decline, or you want to maybe take advantage of it? Let us know. We're more than happy to help you. And of course, as always, Casper,
Give us your thumb.
And subscribe. See you next week.